When you said it's not very much sentiments driven, I mean partly sentiments driven, right? But if you zoom into the ringgit, at current levels, many has said that it's not trading at where it's supposed to be in terms of its fundamental levels.
This is more than sentiment, right? It just, in a sense, it's free fall, right? For this free fall, I think there's a combination of a few factors. One, I would believe that to a certain extent, it is quote unquote intentionally. Intentionally in the sense that you know that during the QE, there are huge influx of the foreign fund. And when they want to get out, there's no reason for you to support your own currency, right? I mean, in fact, based on normal economy, also by the supply demand, when they want to sell ringgit and buy back US dollar, ringgit should drop. That, I would say, that's why quote unquote a bit intentional, let it drift down, right? Of course, why it drifts so much down is $1 million question, in a sense that, of course, if the government, the country, or Bank Negara think that you shouldn't let it drift further down, they can intervene the market. But like I say again, they know exactly the supply demand, how much has come in, how much is about to go out, how much will affect my foreign reserve. So I think they are looking at all these three to let the ringgit drift down to this level.
With all this, how is Malaysia positioned if you compare it to the region in terms of economic growth, in terms of its fiscal position, in terms of foreign reserves?
If you look at, let's say, on the foreign reserve level, on the absolute, definitely we are much more than what it used to be, which is only 30-40 billion. Now we have, although it's slightly below 100, but the quantum is totally different. But the point is that if you look at how much it is sufficient to import, how many months of imports, right? Currently, we are about six months. But even then, this is much higher than what we were in the Asian crisis. At that time, we were only about 3 months. So we still have some rooms. But definitely, it is not that healthy when you compare to other countries where they still have 7 months, where we are lower. Same issue as the short-term debt coverage as well. We are actually the lowest within the ASEAN countries. But again, all in all, it is still much better than what we were during the 1997 and 98 Asian crisis. But of course, if we look at fundamental, yes, we do have some weaknesses. Our current account surplus may start to even weaken further if the crude oil prices does not stabilize. And at the same time, our budget deficit has put a constraint at this moment on the government any policy or any stimulus package, because if you are to maintain at 3.5%, then it becomes very difficult for you to spend, to have pump priming for the economy. So this is a little bit of a very tightrope and difficult to balance between the growth and also a more healthy fiscal situation.
Current account surplus has been actually narrowing, but also obviously this is actually tied to the crude oil prices because it's revenue, right? So do you think you will ever actually get to a deficit level?
If, let's say, the crude oil prices to fall further, then there is such potential. But at this moment, I think it's still not a concern yet. Yes, it has been narrowing, but I think oil prices should also be stabilizing around this level, unless it's really some very unforeseen situation that bring the crude oil down to, which there are some people who have been talking about 30 or even below 30, 20, 18, then we never know. But if, let's say, if at around this 50 level, I think our current account surplus should be able to maintain.
Speaking of foreign fund outflows, I think year to date, the outflows is actually double of what was seen last year. So is this a concern?
I think we shouldn't ask this type of question of when they come in, we never say that is it a concern that they flow in so much, because whatever flow in, you know, somewhere down the road, it will flow out. It's just a matter of whether they flow out within a short time span or it's a gradual outflow, right? So if we say that it is concerned, then from the very beginning, we should have said that it is a concern that foreign inflow is too much. First is that when you look at a country, I mean, for a foreign fund outflow, actually within ASEAN market, other than Singapore, Malaysian equity market is the one that with the largest market cap. And similarly, Malaysia bond market, right, is one of the most established bond or debt market in the region. So definitely when foreign funds look at ASEAN, more money will flow into Malaysia. So when they flow out the time, definitely you are affected more.